Hello and welcome everyone to the Gold and Silver Club end of week commodities review for the 29th of August 2014, presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover a end of week summary for the commodities markets. We'll be looking at the top trades of the week. We'll cover live market commentary and technical analysis. We'll look at the week ahead, so the key events looking forward. And of course, we'll be answering any questions you may have too. So gold price this week, we'll take a look at the major news which has driven the markets. Commodities gain on firmer safe haven demand. The geopolitical conflict between Russia and Ukraine is once again on the front burner of the marketplace as we enter a 3-day US holiday weekend. On Thursday, Ukraine's president declared that the Russian forces had invaded the southeastern region of the country and that forces were in full combat. NATO released photographs shortly after, confirming that it has evidence Russian artillery units were operating in Ukraine, and projected more than 1,000 Russian troops were in Ukraine assisting pro-Russian rebels fight against Ukrainian armed forces. So on that news, precious metal, energy, agriculture, commodities rose as traders sought safe havens. Both gold and silver rose on the situation in Ukraine, with the yellow metal touching a weekly high of $1,298 an ounce and 55 cents, while silver jumped 11 cents to trade at $19.57 an ounce. And in the precious metals, platinum gained $5.73 to touch $898.87 an ounce. In the energy markets, WTI oil hit $94.68 a barrel on concerns tensions between Ukraine and Russia, the world's #1 oil producer, could cause a disruption to global supplies. And in the grains, Russia and Ukraine produced 20% of the world's wheat. So on the above reports, wheat rose 2.38% to hit $5.64 a bushel, whilst corn jumped 1.26% to trade at 3.61.54 a bushel, as highlighted in our top trades of the week. And we'll take a look at that very shortly, just on the technicals too. You can have a look at some of the breakouts that we're getting and certainly some of the surges we've been getting in the energies. So before we go on to our top trades of the week, and we also take a look at the live markets, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications, speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business financial publications, with appeared frequently on financial television. Okay, so we'll take a look at the price of gold right now. We're currently trading at $1,285 an ounce. So we'll take a look at the charts very shortly on that. The top trades of the week this week using the Gold and Silver Club signature trading strategies have been as followed. So first of all, we had a nice a supportive 1272 key level hold earlier on this week on Monday, and we got a nice breakout from that entry. A nice 150-point move yesterday, helped by the geopolitical news. So the risk on that was 75 points, $750 for each lot traded, for a profit of 150 points, $1,500 profit. So for a nice 2-to-1. We got a lovely breakout on coffee this week. The risk on that trade was 40 points and the profit on that 120 as we came up to the resistance channel there. So a lovely 3-to-1, $400 risk for 1,200 profit. And we also had a nice breakout on wheat back up to the resistance zone there. So we had a nice buy opportunity on wheat. The risk on that was 70 points, $700 for each lot traded, for a profit of 175 points or $1,750 per lot, for a 2.5 to 1 risk to reward. So you can see there's been some nice breakouts this week on the commodities to take advantage of. So with that, we'll take a look at the charts now and see how the markets are currently lining up. The first market we'll, of course, take a look at, which has been in the spotlight this week, is certainly gold. So gold, what you want to note at the moment is gold. We do have a pennant which is formed on gold at the moment. So gold, we've got a nice supportive channel here for the gold market going back to January this year. You can see we are getting higher lows. We're also getting lower highs here. You can see the volatility is getting more reduced, and we are getting to a point here where we are soon to get a breakout. You can see gold here. We've got a very clear resistance channel above, a very clear support zone at 1271, also supported by a trend line. And on the short term here, just break it down and have a look at some tighter time frames here. We do have just a trend channel which is forming at the moment. So if you are in any gold positions, you just want to take note of this, because this is where gold has just come down, just retested the lower end of that trend line at the moment. So it's nothing major in terms of a pullback right now. So in terms of what we're looking at for the shorter term here, we do have a bank holiday in the US on Monday. So probably the volatility is likely to start getting reduced here. If we take a look on the daily at the moment, there are some bearish candles here. However, none of those have been confirmed to the downside. So we are continuing just over the course of this week just to get higher lows, higher highs. And what we could see here is either a rotation back up to the 1300 zone to just around the 1300s here, to 1300 to 1310. Or what we'll see if we do come down, we break through some of the lows of this week, particularly if we get back below the 1280 level, we could see a run down, just come back down to retest the 1270 zone. And at this point, if we were to break that, we could see quite a clean break back down to the previous support just prior to the June FOMC, which is around the 1240 level. But we're not there at the moment. These are the two scenarios we're looking at the moment, either a move to the upside back up to the upper end of the trend channel, or a retrace coming back to the lower end of the trend channel here. So gold, we're just awaiting really the next move here. We had a nice breakout yesterday. I hope a lot of you caught that, and awaiting the next move. But do take note of the pennant that we've got here at the moment. Right, going back to Mr. C, your question there just regarding the gold correlation. I wouldn't look at the euro correlation for gold. What you want to look at is the US dollar index inverse correlation. So I've got the US dollar index on the chart here. What we're forming here is a evening star formation. So you can see here that if next week, if the US dollar was to gap lower or potentially confirm the lows here of 82.358, what we could do here is see the US dollar index had a really good run over the last 4 or 5 weeks here. Yeah, we've come all the way up to its key resistance zone around the 82.73 level. You can see the market really struggling with that. That was resistance going back to August last year. We've come up, we formed the doji here so far on the weekly, so reduced volume here. What we'll be looking at now is potentially next week, if we can't get a break above 82.73, the US dollar index will sell off. Now, if that happens, the euro will be supported, so the euro will go up, and also gold will go up. So the inverse correlation will be that if we do see the US dollar index sell off and give back some of its gains, certainly back to around the 81.40 zone, so just coming back, and that's not uncommon at all to test, or it could even just come on retest this previous resistance here just before we get the next leg up here on the US dollar. We are a bit overextended here on the US dollar. It needs to have a mean reversion just to come back to in order to give more traders opportunities to get in long. It needs to pull back and see some profits taken here. So I wouldn't be surprised to see that, and then we'll see gold get supported and possibly a rotation to the 1300s, unless the US dollar index doesn't pull back at all here and we just get a continuation above 82.73 next week. Okay, if we just continue to break out, this will be important because there's not really too much resistance at all until we come up to the next major swing highs here. You've got 83.63, and you've got a couple of other zones just above that 84.60, but you could really we could see a big breakout here on the US dollar index. That'll put a lot of pressure on the metals, but that's not happened yet. As well as that, I know the forex market is very the volatility and the opportunities at the moment are they've dried up quite a lot on forex over the last couple of weeks with the reduced volatility. Commodities are really the place you want to be at the moment. There's so much action on the commodities markets. I mean, I'll show you natural gas. We'll look at oil at the moment. So if you are a forex trader and you're not really seeing many opportunities in the forex market at the moment, you really want to move across to commodities right now, because commodities are extremely liquid, and we're seeing a lot of daily volatility on these markets. So I'll give you an example here. We'll just take a look at natural gas. Currently on the natural gas market, you can see a very clear pattern. Actually, we've got a W-shaped pattern here. We're looking for a breakout of 40.40. We've just started to break out above that over the last couple of days. Natural gas storage inventories were bullish for natural gas yesterday. We got a break above 1 month highs at 40.040. And today you can see we're starting to form a bit of a base here. So previous resistance could become support, and we could really be due a nice breakout here up to the next swing high, which will be previous support, which was broken back in July, possibly a move all the way up to 4.329. So if we do get a move as high as that, we should see a nice circa about a 280 point move. Okay. Right, Chris, so in terms of getting the report, so what you want to do, you can take advantage of our newsletter. You'll get updates on the storage inventories, on all the agriculture, energy markets and the metals markets for the week ahead. So I'll talk about that just at the end, how you can just jump onto our website, subscribe to the newsletter, and you'll get all of that information sent to you via email. Right, so natural gas here. So what we're looking at the moment is currently we're looking just for a breakout, just for confirmation, really a break, just a close above this resistance here at 40.040. So if we get 4.040, so if we get a move above this and we get a close, we could really start to ramp up here to the upside for natural gas, and we'll be looking to target 4.329 here on a breakout. Okay, next market we'll take a look at here, we'll go and take a look at light sweet crude oil. So light sweet crude oil at the moment, we can see we actually had a lovely breakout over this week. We broke above the 94.46 level just yesterday. You can see the market for WTI crude oil has been consolidating pretty much all week here. We've had a nice breakout to the upside, so very similar to natural gas. We are now starting, if you zoom out on the charts, you can see this has been a very key support zone for WTI and also crude oil as well. So if you just zoom right out, you can see this is a very key event area, an area which has been held numerous times previously. So you can just zoom out on the charts and really you can get a good idea of the price structure at the moment of WTI. And this is a very key zone. There is potentially a lot of upside here. So getting into this trade at the moment, we've got a lovely breakout which is occurring right now. So we could really get a rotation back up to this previous support zone, which could create new resistance at 98.468 here. So that could potentially offer about a 400-point swing trade here from a breakout of the current level. So you definitely, if you're not trading oil, there's a lot of movement on the energies at the moment. I'll show you Brent as well, but WTI oil at the moment getting a nice little breakout. This could really turn into a decent longer-term trade. The next swing high you want to get a breakout above here for WTI is the 95.43 level, just to pick up momentum. But we're already getting a nice move from yesterday's breakout point, which was it's about 50-point move so far. Looking at Brent at the moment, so Brent following a very nice trend line on the tighter time frames. We've been in a downward trending channel for Brent for quite some time, and now we're starting to break out to the upside here. If we just go out and again just have a look at the larger time frames, you can see we did get a breakout this week. We came down to a very key support zone around the 101 level. We found support here. We've started to break out, got some positions lined up for additional breakouts here. We've got to move above 102. Now we're looking for additional breakouts above the weekly high. So if we get above 103.36, we've got a nice trend channel starting to form here as well to the upside. You just want to be careful that it won't develop into a bearish flag. But at the moment, as long as we continue to break out to the upside, and if we can get a move above 103.36 here, we should get a decent amount of momentum to the upside here as well. Okay. We'll move over to the other metals in a second. Let's just have a look at a couple of your questions which have come through. Okay, good. Right, Chris, I'll come to that in the end. So if you want to subscribe to the newsletter, even if you want to just send over a private message to myself, we can get you subscribed to the newsletter. That's no problem at all. Mrs. C, again, the euro, we trade the US dollar index, which has the inverse correlation to gold and silver. So euro is not a market we trade. We trade the US dollar index. It's a much more predictable market. Especially against the precious metals. So we'll be looking at the moment for the inverse correlation. So with the US dollar index, which a lot of your currency pairs will trade against anyway, you really want to be having a look at the US dollar index. Essentially, for that trade, for your euro trade, if the US dollar index breaks out to the upside, euro will sell off. And if the US dollar index gaps on the Sunday open, it gaps down, you'll get a gap up in the market on the euro. So you've essentially got the inverse situation here with the euro at the moment, because it will move inversely to the US dollar index. So that's what you want to have a look at, and also play the move with gold here. Yeah, no worries. Yeah, excellent. So just going back to Diz there, Diz right. So yeah, I mean, we are in the end of the month now. So this is the last Friday of August. So often, yes, you do see some profit taking. So certainly the US dollar here, if you will get some traders who are going to take profits off the table around these highs. If you've been long the US dollar index for most of the month, you've had some very nice gains here. So of course, that's something to note as well. It's the last day of the trading month. We could certainly see some profit taking here, which again would provide further support to the commodities and some of the additional forex pairs there if you're trading those. But the US dollar index, we could see a pullback later on this afternoon via profit taking. Any markets which have had a very good run over August, you can often see that at the end of the month, profit taking, and then further moves next week. Monday will be a quieter day because of the US markets being closed. So we'll probably see an influx of volatility on Tuesday. Excellent. Great. Well, let's move on to the next markets. We'll have a look at the other metals. We'll take a look at silver now. Now, silver's been quite interesting this week. It's been trying to break support here. It's been trying to break the 1929 level. It's not managed to do that. So this is really why you don't want to get in trade until you get confirmation. So it's been just sitting along this line, 1929. Same as gold has really been finding support around the 1270 level, 1272. We've seen silver numerous times form inverse hammers around the support zone, but none of these are really breaking 1929. So I wouldn't short silver unless it does break 1929. We're forming a smaller little channel here to the upside. We did get a breakout of this downward trending channel. So again, we want to see how silver is going to close today. We may start to form a bit of a base here if gold can form a base as well. Again, that will be just down to how we close the week here for silver. But silver looking very interesting. Platinum has a lot of potential here. Platinum on the weekly as well, on the wider time frames. So we've got platinum is holding a very key support zone around the 1408 zone. So you can see numerous times this level has been tested. So we could well get a really nice move as we go into next week here. So platinum is definitely one to watch. It's if it's at a very good value zone right now. It's pulled back. If it does break this support zone, we won't look to buy. We'll look to reverse positions and sell short. But if platinum does hold on to this zone, we could really get a nice buy opportunity as we go into next week. Palladium breaking out this week as well. Pullback last week. Palladium, the strongest performing metal so far of 2014, strongest performing commodity of the last 5 years, actually. And we've had a potentially another retest of 900 soon. We're at 894 at the moment, 894 the US dollars an ounce. If it breaks above $900 an ounce, it's going to be palladium breaking out 13-year highs, and we could see a really decent move to the upside here. In a psychological level, we've got some shorter term resistance levels just above, but the next psychological level, which could get tested over the course of this year, will be the $1,000 an ounce level if we can get a continuation and a breakout and really start to build up momentum here to the upside. But palladium is definitely a market you want to trade. It's an extremely lucrative market, as well as platinum. Also, just moving over to the softs at the moment. So we've got corn, which is stuck in a consolidation. So we're looking for a breakout of 347 or 370 here. So whilst we stay in this consolidation, we're on the sidelines until we get a breakout. Look at wheat. Wheat is just forming a pennant at the moment, continuing to rotate within this consolidation zone. We've got very clear support, very clear resistance, looking to see whether we'll break out or just get a rotation down to the lower end of this trend channel. We did get a really nice breakout and a nice trade this week on wheat from the lower end of that trend line. You can see here we've got the 175-point move, came back up to resistance, so back out of that trade, just a nice day trade. Wheat is a great market for day trade. So really nice breakout to the upside, but we're limited at this resistance channel here. You can see it very clearly. This is where wheat has just halted. On the coffee market at the moment, another pennant here. So we've got coffee finding resistance If it can't break this resistance, could have another rotation lower here. If we can break out of this trend channel, we could get a nice breakout back up to the 207 level. And yeah, that's what we're looking at in terms of the softs at the moment. And very shortly, we'll go over. In fact, we'll do that now. We'll go over to the major news announcements next week. Right. So let's just bring you back to the major news. Okay, so major news next week. On Tuesday, the 2nd of September at 3 p.m. BST, 10 a.m. Eastern Time, we have the US manufacturing PMI. So the Institute of Supply Management, ISM, Manufacturing Purchases Managers Index PMI report measures the level of new orders, imports, production, supplier deliveries, inventories, employment prices to determine a positive or negative economic direction. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Wednesday, the 3rd of September at 3 p.m. BST, 10 a.m. Eastern Time, US factory orders measure the change in the total value of new purchase orders placed with manufacturers. The report also includes a revision of the durable goods order data released a week earlier. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Wednesday, the 3rd of September at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US crude oil inventories. That data reports a number of barrels of crude oil commercial firms have in inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. Very important for your crude oil trades. Then we have Thursday, the 4th of September, 1:15 p.m. BST, 8:15 Eastern Time. We have the ADP non-farm payrolls. So coming back to your question, Mr. C, there, just regarding the non-farm payroll, we'll be doing a non-farm payroll session next week, a post-non-farm payroll session. But if you want to find out more about how you can actually trade the non-farm payroll with the Gold and Silver Club live, I'll go into that very shortly. But Thursday, the 4th of September, we have the ADP non-farm payroll. So the ADP National Employment Report is a measure of the monthly change in non-farm private employment. So it's based on the payroll data of approximately 400,000 US businesses. The release ahead of government data is a good predictor of the non-farm payroll reports. That will be an important report next Thursday. Again, a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Thursday, the 4th of September at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have US natural gas storage report. To the Energy Information Administration, the EIA natural gas storage report measured the change in the number of cubic feet of natural gas held in underground storage during the past week. So we've got a big breakout on this yesterday with natural gas, broke past resistance. It was a lovely trade opportunity. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. And then Friday, the 5th of September, of course, we've got the US non-farm payrolls. That will be the big one next Friday, 1:30 p.m. BST, 8:30 a.m. Eastern Time. Non-farm payroll report. They measure the change in the number of people employed during the previous month, excluding the farming industry. Job creation is, of course, the foremost indicator of consumer spending, which accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Okay, so that will definitely impact the US dollar index quite severely next Friday. We should get a big move on that. So coming back to a lot of questions that we've had on today's session, you can, of course, you can certainly find out more about how to trade live with the Gold and Silver Club, how to get our daily trade calls, and how to actually enroll onto our upcoming commodities courses. You can just very simply go to either www.jointhegoldandsilverclub.com, or you can contact us at our London, New York, Johannesburg, Budapest, or Hong Kong office. I'll put those details on the screen for you very shortly. You've got those to hand. And of course, you can subscribe to our newsletter. So just going back to Chris, your question there, you very simply go to www.thegoldandsilverclub.com. You'll receive free weekly reports on precious metals, energies and agriculture, live market analysis and prices. If you want to just drop your email into the chat there, we can make sure you're on that list as well. Okay, so I'll leave these details on the screen for you. And that is it for today's session, everyone. So good luck for today's trading. And we shall certainly see you back here next week, and look forward to hear from you if you'd like to find out more about our upcoming courses. Okay, so take care, everyone. Have a great Friday, and we'll see you in the next one. Cheers. Bye-bye.